Welcome to an update for the Federal Milk Marketing Order 33. This is Dr. Lawrence Jones, and I'm recording this on May 22nd. Now, I would really like to thank Ben Nobis and the Nobis Agri Science group for sponsoring this. And again, I'm a little bit late on getting you this from my normal schedule, but it's really hard to put together a podcast when the market does things that you just don't understand. But I will try to give you some glimmers to what I'm thinking about here. So the reason I say I don't understand, this is the June contract, and this thing traded at the like 1670 number here in early April, and it was at 1970 yesterday, and it's up 20 some cents today, so it's up to 1980s. But I'm expecting this to settle in at the 1850s, and so what is going on in this market? So I put together for my weekly podcast a long-term dairy outlook where I have a gauge that is going from a minus 10 to a plus 10, and of course 0 is neutral. And I've put this at minus 5 in the last podcast. I was a little bit better than that recently, but I did go down to a minus 5. So let's get started. I've got a number of bearish things that I see in the market and a few bullish things. And so we're going to start with the issue of cows and replacements. So let's look at these cow numbers. We're up to 9,425,000. We've just been adding a significant number of cows here. And if we look at these cow numbers back, in time, we're as high as we were here at a moment in 2023. And about where we were at 2018 when we had really low milk prices. What's driving this? And it's partly the replacement numbers and the call rate. So for the last 6 or 8 weeks, we've been well under 50,000 in slaughter rate on a per weekly basis. And on a rolling basis, we're way low compared to what we've been historically. Now, the way I look at this is I kind of draw this line at a 30% slaughter rate. I think we're just kind of holding the herd steady, but we've been down here in the mid-20s here for quite a while. Using all this data, I can estimate that we've got about 0.75 replacements per cow. Assuming a 7% death loss, that says that we can actually have about a 30% slaughter rate and keep the herd static. And the way you do that is you take that 0.75, and it takes 2 years to get an animal into the herd. That's a 35% turnover rate. 7% death loss is that 30%. And so again, that's where that line comes from. So we look at daily production of milk. We are at a record high here in the milk production report that came out yesterday, and just a little bit higher than even this outlier back here in 2021. So I went and kind of pulled together the question of what happens to cheese price relative to milk production. Now, there's a lot of scatter in this data. When we're between 600 and 620, there's a lot of things that can influence it. But once you get low cow numbers, you tend to have higher cheese prices. And once you get higher cow numbers, you tend to have lower cheese prices. And this regression line says for every 10 million pounds a day that we add, we decrease cheese price about 2 cents. At the same time, we've been significantly increasing fat percentages. This is the data from March. The April data is probably going to be down about 5 ticks here, which is right in line with season. But if we go back to order 33, you guys were at 4.32, and a year ago you're 4.17, so you've been increasing fat in your order significantly also. Protein increased, but not quite as much. You're 331, and a year ago you're 324. So these have been coming up, but protein's a little bit harder to raise than fat. So the statistical uniform price you got this last month was $18.80. That had a PPD of $1.32. And this is still reasonably good price relative to 2019, 2021, much worse than we had in 2022. Very similar to 2023, but much worse than we had in 2024. So the other thing that is impacting kind of my bearish view is this new formulas for the federal milk marketing data, and these are coming in effect here right quick. And actually, you've already felt the effect of it in the June advance prices that were released on Wednesday. And what's interesting is because these new class 1 differentials are different for each order, the order 1, which I'm in Boston, gained about 20 cents over the old system, but Florida actually took a hit of a quarter. Now Michigan looks like it's going to have about a 15-cent advantage, and Wisconsin is probably going to take a hit for a quarter. But your class 1 price is going to be 21.06, where if we were on the old system, it would have been 20.90. The biggest things that played into this were the new make allowances that definitely lowered class 3 and class 4 skim. Barrels were removed from National Dairy Sales Report, and that was not necessarily a good thing on this particular report. And the base is now the higher of class 3 and class 4, where before it was the average plus 74, and that was not necessarily a good thing either this month because they were very similar to each other. So the average plus 74 would have been better. And then, of course, the class 1 differentials. Now, one of the things that we've been kind of looking at is what is going to happen with these new formulas relative to margin on making cheese. And that's the reason that the plants wanted a better make allowance. So what I did is I took 100 pounds of class 3 milk. Under the old system, they would have paid $20.50 for it. Under the new system, they're going to pay $19.59. So quite a bit less. And I put in a cheese price of $2.01.5. So that means if we get 10 pounds of cheese, that's worth $20.15. So that would have been a negative margin. Or under the new system, it would have been a 56-cent margin. So basically, the margin to make cheese has just gone up about 9 cents a pound. So this is going to spur production, I believe, of cheese because the plants were barely marginal are now going to be profitable, and the plants that were profitable are now going to be highly profitable. So one of the things that I think has been impacting the emotion in this market is in the old system, we would say $1.90 cheese would equate to $19 class 3 milk, but that is no longer true. And in fact, $1.90 cheese equates to about $1, less than at $18.09. So part of what's been going on is you take in novice traders, they're going to see $1.90 cheese. They're like, I got to buy that milk because that's going to be $19 class 3, when in fact it would have been about $18.09. The other thing that we've been talking about for a long time here is more capacity. And what we've been doing for almost 2 years now has just been reducing the cold stocks of cheese. And so what we thought was going on is that we're reducing those and thinking that the new plants would kind of make up that difference. And this is a picture of the Great Lakes plant over in Cuba, New York. But at some point, this is all going to have to reconcile, and we're going to have to deal with the fact that there is going to be a lot more volume out of these new plants, and there's only so much cheese stocks that we've drawn down. The fact that we're drawing down the stocks shows you that the demand, which is in the blue, has been higher than the black, which is disappearance. But if we look at the kind of average demand, it's 39,156,000. Now in March, we produced 39,541 pounds of cheese, and in April, we're projected to produce about 39,500,000 a day. So we're producing more cheese than which has generally been disappearing. So if we look at the class 3 milk in the federal orders, we had a significant rise here when the St. John's plant came in. So we hit a new total capacity here. We're just about at that level right now. So again, it looks like we're bringing these new plants on probably a little bit slower than we thought it would originally happen, but they are starting to produce cheese. And the last thing on the bearish side is the weak consumer sentiment. The numbers just continue to drop. For May, it was under 51%. And the year-over-year change is down 26% because we were 69 and change in May of 2024. So consumer sentiment is kind of rolling into the number of people going to restaurants, the number of cheese and dairy products that are being consumed out of the house. On the bullish side, we've got very strong exports, and I think that's part of what everybody is banking on at the moment. But the problem is with the last global dairy trade, it was down 0.9%. We had 3 sessions that were up session over session, and the big one that dropped was cheddar. So that's going to make the world cheddar price a little bit more in line with our price. And right now we would say that we're probably not going to be making a lot of exports, at $1.94 blocks with the world market at $2.27. And for the next couple months, the futures are trading over $2. And so that's going to make exports very hard to do in the short term. We only have the March data for exports. We'll get the April data here the first week of May or so. And I like to express exports on a percentage basis. So we had an export of 8.9%, and that's exactly what it was in February. So even though we had a little bit more production in March, the actual exports were not up on a percentage basis. Now, it's interesting to look at just cheddar, which is 27% of the total production, and we exported 6.6% of that, where in February we exported 4.9. The exports going to Mexico actually dropped a little bit from 34 to 31%. Generally, we don't export much butter, but given the difference in world prices, we've been up somewhere over 5%. So we were 5.9 when in February about 5.7. So again, exports are important, but are not as major as I think a lot of people like to discuss. Now, the other thing that's going on is generally the spot market and the National Dairy Sales Report are fairly highly correlated. Now, there are times back here in 2024 when the prediction from the spot market did not meet what we had on the actual, and there are other times when the actual is a little bit higher. But we've been on this tremendous uptrend of spot cheese, and right now this last dot is only blocks because we're moving into a block situation. But this is a perfect storm when the arbitrage can actually buy spot cheese and turn around and sell it on the futures. Anytime there's about a 10-cent difference on that. And again, the arbitrage traders really don't care if prices are going up or going down. All they want to look at is the spread between spot and futures. At the same time, the forward curve to put cheese in cold storage as a head is looking good. Because you look at these May prices, they're clear down here to $1.83 and so. And we're going to be looking at $2 cheese out here in the future. So again, for May, we definitely want to put cheese in cold storage, but what's going to happen come June? Once we start looking at the June cheese, I think putting that in cold storage is problematic because you're going to be pulling it out at a lower value. So to kind of look at this, we'll look at the spot cheese price relative to National Dairy Sales Report. So this data here is known. So this last National Dairy Sales Report, we had $1.81 basically cheese, and that was 7 cents over the spot market, but the spot market was very low. And the question that is really kind of brazen right now is what's going to happen in June. So I've got this forward curve, that's supporting that 1850 kind of number. But what if the National Dairy Sales Report just cuts this off somewhere here around $1.85 and says all of this is due to arbitrage? And what is out in the countryside is more like $1.85, $1.88. That's going to bring June in at an $18 class 3. Now that's starting to look, less realistic with every day that goes by, and we've got, a very strong June price, but that's the concern at the moment. So just kind of look at these other prices. Whey has been very strong and continues to be strong. The last National Dairy Sales Report was about 51. Now there was this big discussion, last time I think we spoke about what if this goes to 30 cents, and that just has not materialized. But right now I've got it at 52, 53, 54, even though there are some on the spot market that's a little bit higher. Butter has been a very small trading range, really around 235 here for quite a while, and I've kind of got it in that 234, 235 range. And the last one is the non-fat dry milk. It's been on an upward trend. The blue line is the global dairy trade. We're generally under it by about 20 cents, but this whole area in here is when California was having problems with bird flu and not making the non-fat dry milk that it normally would. It reconciled back here in April of 2025, and now it's been kind of coming up. We have a smaller than normal difference between global dairy trade and the non-fat dry milk. Finish up just by looking at some grains here. This is the prices as of Friday, and we had a significant increase in soybean meal. Soybean meal is up about another $4 today, so it's continuing to go up. And here is the channel that we've built. So anytime you can get down here, around 295 is worth probably locking that protein up, but this is slowly moving up here. We've got kind of the high end at 330. Now, if there are issues with the U.S. crop or Brazil crop, this is going to head up. Part of what drove this last week was the WASDE report that came out, and they lowered the ending stocks for soybeans by about 5% for 2024, 2025. And for the 2025, 2026 ending stocks, they came down about 16%. So that was quite a bit lower than what the trade was expecting, which is why soybean meal is on the way up here. And here are production estimates for corn and soybean, and they were up just a little bit of a tick. Finally, I'm hoping that you guys can get the nice planting windows here. I know if here in the Northeast we were way far behind, and we've just not had any kind of planting windows, but hopefully this is going to start to break out into an extended dry stretch, and we can get these crops in and recover from kind of the spring that we had was very wet. All right, I want to thank you for listening to this, and I'll try to get you another report, in a timely fashion next month if we can get some understanding as to what is exactly going on with these markets. But I hope everybody has a great day, and wish you well.